Hello and welcome to RLI Corporation stock analysis video, ticker symbol RLI. It's an insurance company in the United States, and the goal of this video is to determine if the stock is over or undervalued. To perform this analysis, I gathered the information that I need from all three financial statements from 2017 to 2023, and over here I have the 2024 forecast. Looking at this data, the first thing we can notice is that the revenue is increasing since 2017. I understand that in 2023 it's lower than 2022, but I believe the rate of increase or growth in 2022 revenue is higher than any other year. The same issue with the net income, but the free cash flow is lower. So that doesn't make sense, which gives me the conclusion that 2022 was an abnormal year. So I'm going to choose to look at the whole period from 2017 to 2023. If you draw a straight line from those 2 points, definitely there's a growth in the revenue and the net income, and also on the free cash flow that has been positive since 2017 and growing. The debt was decreased by about 50% in 2023 and went from 199 million to 100 million. Another good news about the debt is that this company can easily afford their debt because they made 54 times the amount of interest they had to pay in 2023, and all the prior years they have made multiple of the interest expense they need to make. But that's always good news because when this number is low, that reflects on the return investment ratio. Usually it will get higher when this number is lower because people are worried that they will default on their debt. This company doesn't buy some of their outstanding shares, and the rate of increase in the graph shows a lot more than the actual 3%. So since 2017, the outstanding shares only increased by 3% from 44.2 million to 45.6 million. I believe that the policy is to issue dividends instead of buying back some of their shares. And yes, this company is a dividend company, and in 2023 they issued $3.07 dividend per share. I'm not concerned about the increase in the outstanding shares, but I will definitely consider that in the forecast. To have an idea about the prior year return investment ratio, I downloaded the historical data for the share price, then I took the daily average and the annual average, and it came out to be $133.80. Using the annual average for the share price and the free cash flow per share in 2023 and 5% discount rate, the 2023 return investment ratio is 7.13%. In other words, the market demanded about 7% return investment ratio from this stock in 2023. Now let's talk about the 2024 forecast. I'm recording this video in April, and we already know the result of the first quarter operations, and the result is great. The revenue, the free cash flow, and everything is more than 2023 first quarter. But at the same time, I want to have a conservative forecast. In other words, I'm assuming the free cash flow in 2024 is lower than 2023, which doesn't make sense when you look at the results of the first quarter of 2024, but I want to have a conservative analysis and forecast because maybe there will be a recession or slowdown in the economy in 2024. This means that the free cash flow per share is $9.26, and for the outstanding shares, I'm assuming it's going to increase by 0.5% in 2024. I'm using about 3% discount rate, which is actually the 5% prorated for the number of months left in 2024. And if I start with 6.7% return investment ratio, the share value will be $133.63. And today's price is $144.15. So in my opinion, the share is overvalued by about $11. I want to mention that this valuation is based on the expected or forecasted free cash flow and the required return investment ratio. So if you change this number or this one, you'll have a different valuation. So for example, if you think 2024 will be a better year than 2023 and the free cash flow, for example, will be 500 million, then the valuation will be different. And if you change the return investment ratio, for example, to 8%, it will change again. But in this case, I'm trying to have a conservative forecast and analysis, and I'm assuming that the free cash flow will decline in this year. If you wonder how much the return investment ratio will get if you buy the stock price today for this amount, it will be 6.2% because if we change the return investment to 6.2, the valuation will be around $144.40, which is very close to today's market price. That would be all for this video. Thank you for watching it to the end, and please let me know what you think in the comments section.